Good morning, everyone. Okay, today is March 11, 2026. We are going to start analyzing MNQ. We are late today, but let's start. Generally, we do not trade the first 15 minutes. So, yeah. It's March 11, 2026. It's 9:52 a.m. Let's start with the weekly time frame. I still have weekly high right up here. Big high. Weekly low has been taken out, and that's why I'm not going to mark that weekly low. So what is the weekly high? 24, 25 to 43. There it is. What is up on a daily time frame? On a daily time frame, there was a bullish pause candle yesterday. I took previous day's high, but did not touch weekly high. Previous day high. Okay, right there. On a daily time frame, we have seen that the liquidity here is taken. It is now moving higher. So if it wants to continue higher, then it will take out this weekly high. On a 4-hour time frame, what can we see? The low of this taken and strong rejection from the bottom side, which means it's looking for higher side liquidity, which is previous week's high. Hence, I am looking for bullish ideas. Daily is bullish pause. 4 hour has consolidation. Four-hour is consolidation. Let's move to 15-minute time frame. 15-minute time frame, I am pretty much like this is pretty bad. Sell side liquidity, see equal high, equal lows, equal lows. It is not taking down this liquidity, which is a good draw, like relative equal lows, which becomes a good draw on liquidity. What am I watching? What am I looking for? Look at this high, look at this high, and now this high. What I'm looking on a 15-minute time frame is what happened here. See this equal high, this high, the swing high, then the swing low. These are double bottom, like with VIX, which is a good relative equal lows, which is a good sell side liquidity. It has not been taken out yet, and yet the price went up again higher. It took out this swing high and got rejected immediately, which means it is looking for sell side liquidity down here. So I have on a 15-minute time frame, we are bearish bias. Okay, we are looking for Asia. High is open and low has been taken. What about London? London low is taken and high is taken. London high taken, London low taken. Right now the price has displaced higher. Look at this fair value gap, bullish fair value gap. Okay, let's move to a 1-minute time frame. Price moved up, consolidated. Look at the VIX. If the price takes out this liquidity, this bull fair value gap, it inverses this, then I'm going to short the market looking for this low. current structure, bullish displacement. We can take a long entry here, which is a good entry. Let's move to a 30-second time frame. Let's see what's happening. What we are watching is, look at this bullish prevailing gap was taken down. Price is chopping a little bit, which means yeah, I think switching this time frame to 1 minute, yeah, so that I can see what's happening. This is like this. If you see this is one of the good structure. So a displacement downside and an emergent, like immediate V-shaped recovery plus fair value gap inversion. Could have taken longs here. 29 points of stop loss against this 71 points of target. Yeah, I'm just waiting. I'm in no rush here. We have two targets up above. One is previous day's high at 25,217 and one is weekly high at 24,243. So I am in no rush right now to look for longs. But yes, this is one of the A++ setup where you get 15-minute displacement, 15-minute fair value gap, price comes down, shows us this bearish displacement and emergent or immediate V-shape recovery. Yep, price looks pretty bullish, pretty strong. It's moving strong. Okay. This was a pretty strong candle. 70 points off. Oh, we had news. See, we had CPI today. Okay, Trump is speaking. Trump says war with Iran will end soon at 10:02, and that is the reason why the price spiked up. Practically nothing left to target in Iran. Agreed to release 400. Okay, IEA members agreed to release 400 million barrels of oil, which is kind of bullish news. Irrespective of the news, we are going to trade what is visible to us. Like the news is positive. If we get positive, if we get bullish, Asia high has been taken out. If I'm looking for shorts here, then it's like 80 points of shorts. I don't want to risk that much. Target is 192 points. Okay. Okay, I'm in two shorts here. As this bearish inversion fair value gap, I don't want to risk much, and so I'm just looking to take exit above this fair value gap. The reason why I shorted the market was this was 15, like this was high. This was the high. It took out Asia session high. It is kind of a risky trade against the trend where the trend is higher. We can, like, that's why it's minimum contract. I'm not risking much here. We'll take another trade. If we see a bullish setup, we'll take another trade. Okay. So see what happened. There was this low. There is this low. Then look at this, a higher low. When this kind of thing happens, what is the previous swing high, which is here, and the other one is here. So these are the kind of setup. Right now the price is trending up higher. Price is right now trending up higher. There's only green candles forming. Now watch this fair value gap. If this fair value gap gets inversed right now, I'm going to take long, stop loss below this low. The same concept I was explaining on a 15-minute time frame, like higher low. If it breaks down, then we know that we have the sell side liquidity at 24,892, which is about 200 points from here. Yeah, if we would have kept our stop loss here, which is what ideally we should be doing, then we would not have been taken out. We would be in profit by now. Orders triggered at 147.50. What was the high? 149. Yeah, and we sold at 103. Would have been up 20 points by now. It is not presenting a lot of fair value gaps as of right now, so I'm not entering here. There is a 5-minute fair value gap here, but not taking that into consideration as of right now. I'm not taking longs, I'm not taking shorts as of right now. Well, there is still some bias up here. What the 15-minute time frame? Price is strongly moving higher. Yesterday, price was strongly moving higher. Day before that, price was strongly moving higher. The news is coming positive. And generally, when this kind of thing happens, it starts to look for liquidity up higher. Now, because the price has taken out this liquidity and rejected, I'm actually looking for this low to get taken out first before the price takes out this high again. It did not happen, hence it should happen anytime soon. Okay, this 15-minute fair value gap, it has completed its objective. I'm deleting this one. Right now there is this 5-minute fair value gap right here. This gets inverted, candle closes in 3 minutes. If this gets inverted, then we will be looking for shorts. Actually, kind of there was one of the entry right here. Bearish inverse fair value gap. Could have taken short here. Stop loss 24 points. Went down 35 points. Looking at the market movement, I am a little bit hesitant in taking any entries as of right now. I think we can wait for a better better plan, better price action. bullish for value gap right here. We have inversion, we have bullish for value gap. Yeah. The price action is not that good. The price action is not that good right now. See how it's range bound. I can take shorts here on this inversion. I can take shorts here on inversion, but it did not happen. Did not close this. Sorry for that. I'm looking for in shorts here. Stop loss is again 42 points. We're going to hold this trade till we take out the sell side liquidity. What we have seen is, as we have taken out Asia session high, and my analysis was that this high was taken out. This high was taken out, and it had to be seeking liquidity below here, right here, which it did not do yesterday. Which means if we are looking for sell side liquidity right now. So the best thing was Asia session high was open, which was taken out. Asia session high was open, which was taken out. Now I think we should be looking for this liquidity. We have taken out this high, all this liquidity above here. We have taken out all those liquidity. We should be looking to take out the sell side liquidity. I will be looking to add more into this if we see any consolidation. As of right now, we can put our stop loss to break even simply because this target has been taken, which means this was TP1, should have been TP1. It should have been TP1. So this is break even right here. We are going to look for another partial here. Just let it run. I think we can see 15-minute is strong rejection from the top. Just going to wait. I'm not taking any partials. I would have taken partials if we had much higher quantity, but not right now. If we get another entry like this, fair value gap or something like this, then we will look to okay, I'm taking one out here. 960. Confirm. We still have 2 minutes left. Which means 4 30-second candles before this 15-minute candle closes. We are already up 1:2. Just continue to hold. I'm continuing. I'll wait for this target like the first partials. I'm waiting for the first partial here. These are, if we get another fair value gap here somewhere, I will look to enter short again, like add some quantity into it. There is no fair value gap here. Let's see if we have something on 1 minute. Probably a little bit of that. There's one fair value gap here. So most probably we are going to get another fair value gap here. If this fair value gap gets inverse, I'm going to look for another short opportunity. If not, then we break even. $35 points of stop loss again. If this could. I will add another short position, like add into this short position again. If this fair value gap gets inversed, I have added another short here. There are no fair value gaps in this downtrend move, which is kind of concerning right now, but yeah, the low has been breached, which means should be break even again. Continue to hold this. I would, yeah, these things has happened. Like yesterday it was like two ticks away from my target. Yeah, that's not happening today. It's perfect. Partials out, you're getting paid. Watch this fair value gap. Watch this fair value gap. If this gets inversed, I'll be out. I'll be out at any point. If this fair value gap gets inversed, there's no meaning of holding this trade for a longer period of time, because see the displacement downside. If that gets rejected, if this fair value gets filled, it's highly likely that price will try to continue moving up higher, and that is so. Yeah, we were in loss of 180. We made 260 on it, which adds up to somewhere closer to 430. We made 430 in this trade. It's a good trade. All out. I think this should be good for the day. $260 in how many seconds? That's 13 minutes. Instead of working for a 10-hour shift, that's better. That's better to trade for 13 minutes. And that's just on three micros. That's just on 2 to 3 micros. we could have imagine this with two NQ, 2 mini contracts. You would be up 2,300 for the day just with 2 NQs, two mini contracts. Why did I put my stop loss right above here? I was just worried about this thing. The same thing when I told you this is a displacement leg downside, strong displacement, and if this fair value gap gets inversed, which means the price will highly likely to move up higher. There is no reason for me to put my break even or trailing stop loss here or at break even. Simplest reason is if this fair value gap failed, it is highly likely to look for buy side liquidity, which will be up higher here. The probability of taking out this high is highly likely, and if this high gets taken out, this high can also be taken out. Like this is the previous high from here, which simply means it will go on to hit my trailing stop loss. That's why I exited just right above this fair value gap. And why did I not book the profits here? Why? Because if the price would have tapped into this fair value gap and continued to move downside, so it's just about reading what's happening on this price action. So what's happening? Price is moving, chopping up, and giving us a good move. Same thing, price moved up higher, chopped up, gave us a good move downside. So we could have also taken out the long trade here, which would have been about 70 points. This one was a rather better trade, 102 points, and we had the first entry from here. If we would have taken out if we would have kept the stop loss up high here, we would have not been out of the trade, and we could have got easily 135 points. See, like this is exactly what I was talking about. If this fair value gap was inversed, it is highly likely that it will be looking for liquidity up high here, and there would have been no reason for us to put the trailing stop loss here, whereas we know that the price has given us an indication that it could be looking for liquidity up higher here. It's like giving away your free money. So this was a good trade, 110 points of trade. So 1:2, easy 1:2. We risked almost about $200. I think we risked about 42, 80, 160. We risked $170 and we made about 430. That is, RR has also been maintained. One good trade a day, that's good enough. That's good enough. And if we can do this consistently, then we just don't need to work a whole 10-hour shift. Starting is difficult, where you have to understand everything, how, what is, like, you have to master the strategy, you have to master the psychology. And even I have the phase where I would trade 3 weeks, like I would trade good for 3 weeks, and then there would be a week where the market would just change its condition, it will just chop around. This week the market has been moving so good, it's just moving, it's leaving a fair value gap, it is giving us the setup. Days like this are on the where we should be able to capitalize, and so that during the week where it's not moving that good, we can wait out that we can wait out those periods. If we would have taken this long, 56 points against 30 points of risk, we could have taken that, but it's against the draw on liquidity as per our context for today. Hence I did not take any long trades. I was just looking for shorts, which I took here. One we took here was small loss because we did not want to risk much, but then again we made the same. Yeah, if you cannot catch the reversal, you can always catch the continuation trade. So another thing, what are the trade types? AMD model, reversal was this one. Because we did not put the same SL, we failed on the reversal trade, but then we did take a continuation trade where we took 1:2 and we exited at correct time. AMD model, what is the AMD model? AMD model is something like this. See how there's an accumulation, like price is just range bound chopping here. What it did was take out this low, give a strong displacement and a strong V-shaped rejection. We saw this fair value gap, we could have taken long here for this high being the target. That was the AMD one. So market provided us with all three trades today: AMD, reversal and continuation. Markets are here forever. It will give you at least 3 days a week. It will give you good trades, good trading setups, and you should be able to capitalize on those 3 days so that you don't have to trade the whole week. On a day when you know that the market is not moving good and you did not capitalize on good days like this, you will try to take trades on the days where the market like the price movement is not that good. And during those days I've seen so many, I personally have failed so many accounts on during those days. So now I understand, when the market presents you the opportunity, when the market is providing you all those setups which are so obvious to you, you just need to capitalize those setups. Once you do that, you don't need to trade. Sometimes just one trade a month is good enough if you know how to capitalize on that one particular trade. The number today is 260. With 2 NQ, with 2 mini contracts, it would have been 2600. With 20 mini contracts, it would have been 26,000. One good day in a month is good enough for 4 or 5 months of profits. And market continuously keeps providing this kind of setups at least once a week. Once a day is also good, but at least once a week market provides this kind of opportunity where you can just capitalize, go all in, and you can make a lot of money. But in order for you to be able consistently be able to do that risk high and make money on that one trade, you have to understand the market, you have to understand the price movement, you have to master your setup, you have to master your psychology. I think I'm done for the day. Market can move either side. It can go, the drawn liquidity looks like this triple. This is highly likely a draw on liquidity, but markets can do whatever they want, whatever it want. We just we just need to understand how we manage our account. That's it for today. See you guys tomorrow. Most likely I'll be looking to trade after 9:45. Thank you guys for watching. See you guys tomorrow. Have a great day.